So welcome. My name is Katie Anderson. I am one of the owners of Appearing Management Group, and we appreciate you joining us today, spending a little bit of your time taking the opportunity to learn a little bit more about associations and what we do in your role as a board member. So thank you so much for joining us today. We always feel like January is a great time for us to touch base on financials. So we're going to be going through understanding your association financials, kind of how to read the reports, what are some of those things as a board member that we want you to be aware of. We don't expect for our treasurers or our board members to be CPAs in any way. We really just want to make sure that you have a fundamental understanding of the information that is being provided to you and kind of how to utilize it within your capacity of making decisions as a board member. That's really our goal. There is a lot of, obviously depth to the information that is sent, and the treasurer might be looking at those reports from a different perspective than the rest of the board. And it's really our goal to give you the basics of accounting. How are we going about carrying out the monthly transactions? How are we reporting that into your financials? What reports are you going to be receiving on a monthly basis, and how to read those reports? We're also going to touch on some, sort of key indicators, what to be watching for and what the signs translate with those key indicators. And we're going to talk a little bit about gauging fraud. I really personally believe in our industry that the financials are one of the board's most important roles and responsibilities. And while we as a company have implemented some protocols to make sure that association dollars are protected, we believe that it's important for every board to understand what those kind of hot spots could potentially be. And, maybe it's not in your role as your board member for your community, but in other aspects of, volunteering that you may come across this in the future. So we're going to touch on some kind of common areas for fraud in our industry and how to be aware of that as a board member. So let's dive into the financial basics. Really, the financial basics that we want to make sure that everybody really understands are, what are the puzzle pieces that sort of frame the association or sort of make up the financial puzzle for a community. So those financial basics that we're going to go through and kind of talk in detail are a little bit about the state statute. So what does the state require? What does the state of Oregon require for you as a community? And what do your association governing documents require? That's always going to be the starting place for really any conversation that takes place for your association. What are the authorities afforded to us by the state, and what are the responsibilities that are noted in the documents? And so you'll find that our managers probably refer to this most frequently. Where are we pulling the authority for assessments, for special assessments, for how we're taking care or maintaining certain common elements? The sort of secondary piece of the overall financial puzzle is going to be, what are the owner's needs and expectations? Your governing documents are going to lay the framework, but ultimately we want to understand what the owner's needs and expectations are, because that helps then plan from a financial perspective. There is some latitude in governing documents around what associations maintain. There's generally catch-all clauses in governing documents that say, here's the set of things that you're responsible to maintain: the park, the roads, the sidewalk. There's generally going to be this catch-all clause that says, and any other thing, anything else that the board may deem to be mutually beneficial to the ownership within the community. So that could mean that, the association wants to clear the snow from the sidewalks for the owner, so the owners don't have to worry about hiring contractors themselves. So there is a little bit of latitude to sort of then take it a step further and say, this is what the governing documents say, but what are the expectations of our owners? And how do we go about making sure that we're meeting those expectations? And that third sort of piece of that is that we're then approaching it from a balanced budget perspective. We're not the federal government. There's not an endless pool of money. We can't, just keep going back to the owners for more money. So really your budget's going to be developed from what are the expenses, and that sets your income. We don't generally build budgets from backing into them from an income perspective. So we're not generally going to look at it and say, we want to keep assessments X. So how do we align the expenses? It's generally the other way around, and that we're balancing the budget from aligning the income against the expenses. And then having a fundamental understanding on what is the operating versus what is the reserve. And we're going to talk about this on how that analysis happens. And there is some latitude there for the board to sort of set some policies so that you are controlling what is pulled out of your reserves and then what is ultimately an operating expense. So there's sort of three buckets that the board needs to be familiar with when it comes to your finances. The first is your budget. Your budget is really that planning tool that assists your association in setting forth not only what your assessments are, but it also is that planning tool on, what contractors do we plan on hiring for this year? What services do we need to engage? And then when we get into reserves, what maintenance work might need to be done. And so the budget is really that first fundamental planning tool that lays out what the board is really going to be doing over the next 12 months. For us, we start the budget planning process in August. Reserve kind of updates and planning start earlier than that, but our team starts assembling next year's budgets in August and September, and getting drafts out to the board to communicate with the boards as far as what do you want to include for next year? Are there services you're not happy with? Are there things you want to bid out? Stuff of that nature. And so the budget becomes that sort of building block of a planning tool. Your reserves, reserve studies, reserve contributions, you're going to hear sort of a lot of interchangeable terms there. Your reserves are any expense that is between 2 to 30 years. And that is required by the Oregon statute. So the Oregon statute says that a board is obligated to financially plan for the replacement cost and the long-term maintenance of all common elements. And those expenses have to be planned for between 2 to 30 years. And the 2 number is because anything that you're doing annually is generally falling in your operating budget. So if you're performing that work annually, you're generally going to see that come out of the operating. There are some exceptions to that, but that's the general rule of thumb. And so your reserve study is going to provide that foundation for that reserve planning. And your reserve study is going to be facilitated by a professional. It's going to review your community, provide the board with a recommendation on the useful life of those common elements. And then you're going to have a financial component of that. And the reserve study and the budget play together because your reserve study tells you what those contributions need to be. And we're going to look at kind of a sample of that a little bit later on in the presentation so you can understand ultimately what those reports look like and how they play into the overall financial plan for the association. And so the budget and the reserves kind of set that financial foundation. It establishes that planning for the coming year. It sets the assessment amounts. It provides the manager with a lot of directive as far as what the expectations of the board are for the coming year. And then that's really then where the financial and sort of monthly transactional side of things come into play. And so there's this performance of those financials that happens on a transaction basis monthly, whether it's, paying assessments, you may be on a monthly or quarterly or semi-annual rotation and paying of those assessments. But generally there's going to be transactions that happen every month, whether it's paying your landscaper, keeping your, insurance payments up to date. There's going to be accounts payable transactions generally on a monthly basis. And that we're going to go through a little bit so that you understand kind of how those processes happen and what those reports look like. But understanding that these are kind of the 3 buckets that make up the financial picture for the association is really important for you as a board member. So some things to keep in mind from a best practice perspective on the budgets. Budgets are generally a 12-month. Not every community association runs on a standard fiscal year from January to December. We have some that their fiscal year starts in April, some that start in June, some that start in September. So there are some variations on what those fiscal years look like. Generally, I will say probably 90% of our associations are on a standard fiscal year that run from January to December. Policies for non-budgeted or reoccurring expenses. So this, when you move into your budget timing, this is a great time for you to look at what is the board's policy when something comes up that's non-budgeted. Where are we paying it from? Do we have a contingency line item? Are we paying it out of retained earnings? When you get into the habit as a board of making decisions from a position of understanding where those funds are coming from, it will be extremely helpful for you making sure that you're staying in line with the financial plan. So, we want new signage. Fantastic. Where are we going to pay for that from? Do we have a line item that's noted in the budget that we can pull that from? Do we have retained earnings that can be utilized to pay for that? Or do we need to put that in the planning for 2023 and properly budget for that? So those are questions that the board can ask as you are making decisions on, really anything. You need to make sure that there is an understanding of where, what line item within your general ledger is funding that expense that you are making a decision on. Competitive bidding. How often are you going to be bidding out the contracts for your landscaper, your snow removal, or your management, or those types of service-based contracts? If you have great relationships with them, I would say right now is probably not the time to be bidding those contracts out with the labor shortage and the world kind of being where it is right now. Obtaining competitive bids is really challenging. I will say specifically on the construction side of things, getting one or two contractors to the table to provide you with proposals, it is kind of a win right now, especially given how booked out everyone already is. And then, having an understanding for what is your accounts payable and your capital expense policy. Who's overseeing the bills as they're being paid? Is your treasurer seeing all of those expenses? And when you have a decision to pay a capital expense or something out of the reserves, making sure that the board has a fundamental understanding of, is that in line with your reserve study? If you're paying more for that project than was originally noted, how are you adjusting for that on a regular basis to make sure that your reserves are kind of staying in line? So a few things to kind of keep in mind when you move into the budgeting process as to how you go about analyzing that financial planning tool. And this is, kind of a general format of what your budget is going to look like. It's, you're going to have the 12 months of expenses. You're going to have the general ledger column account numbers on the far left-hand side. And you're going to have, a breakdown then of assessments. So how does it compare our budgeting? How does it compare to last year's expenses? What are the potential increases for the community? This particular example happens to have a water and sewer contribution. So some of the owners are paying towards that, but not all of it. So you're going to have some calculation on the assessment. But your general format of your budget is going to show a much greater detail on your operating expenses. So you'll notice under the expenses that you've got common area maintenance and general administrative. And there's a lot of detail as to what makes up that ultimate operating assessment. And then you've got this reserve contribution line item down here at the bottom. And that isn't going to reflect the detail that you would then subsequently find in your reserve study. So that's why it's important to understand how these all play together and the tools that you then look at to understand, is this $14,000 that we're setting aside for the reserves, is it something that makes sense from the perspective of what needs to get accomplished? Are we tracking with the funding? And we'll look at charts later on and how you might, kind of assess that from a board perspective. And so your budget piece of this is, kind of a detailed on the operating, less detailed on the reserves, because then you're going ultimately to the reserves study to find the detail of what are those common area components, what are the schedule for those maintenance, and what's the dollars that we're spending. So the replacement reserves ultimately, the report that you're going to get from your consultant is going to be, in the neighborhood of 30 pages long. So this is a really basic summary of ultimately what that replacement reserve, kind of the starting place. So when we start to talk about how the reserves are assembled, you first and foremost are assembling what are the components associations responsible for. And so this is where you're going to see a greater amount of detail then on that reserve fund. So we have, asphalt and concrete and roof and exterior buildings, and we have the estimated remaining life. And then we've got, what does it cost to replace that? What is the fund balance for the beginning of the year? So how much money have we set aside? What is the estimated requirement for the annual contribution? And what will be the fund balance at the end of the year? And these categories are ultimately then what you track from a perspective of how well funded are we on our reserves? How are we doing? If we need to do a project, are we going to have the money to do that? And so, some of the things that are helpful to look at is, what is the estimated remaining useful life? How much longer do we have before we have to pay to replace them? So if we've got 10 years left on that exterior building and the cost of replacing it is $216,000, we've put aside $61,000. We're going to put an additional $20,000 away annually. And that's going to give us at the end of this year, $81,000. And so does that then, or $85,000. Does that then track ultimately with where we need to end? So at the end of that 10 years, you have the money set aside to do that work. This tool is ultimately a tool in order to avoid doing special assessments. It's kind of that simple. You're setting aside the annual cost of replacement of that element so that at the end of that useful life for that element, you have the money necessary to do the maintenance. So you're not funding those projects through special assessment or through dues increases in that way. So this is a planning tool that goes hand in hand with your operating budget to make sure that you have the funds available to meet the obligations for the association, but also to meet the expectations of the owners. And the overall reserve plan, as I said, those reports are generally much longer. There is a lot of great information in them. If you haven't looked at your reserve study, I would encourage you to open it up and understand it, because it is an important planning tool. And what you're going to see this time of year is you're going to see our manager sort of bringing forward a list of things that say, this is what is on your schedule for this year from a reserve perspective. So these are the things that are up at the end of their useful life. Now, it doesn't necessarily mean that you are going to spend the dollars at this point to replace that or to do a major maintenance on it. If the component is still in very good working order, you may push that out a year or two. You have that flexibility as a board, but it's something that we're analyzing on an annual basis to take a look at for every one of our communities and bring forward those recommendations. And then that becomes that planning tool as far as what projects need to happen this year to stay in line with the overall goals for the reserves. And part of it, part of these reserve components, what you're going to find in there as well is that you're going to see that there's going to be some maintenance components that go along with that. So you may have asphalt in there as a replacement in 25 years, but you're going to see that there's going to be regular reoccurring maintenance to keep that element in good working order. So you're going to see seal coating and crack sealing, maybe some slurry sealing, depending upon your roads, that are going to keep that asphalt in that optimal useful life condition so that you don't have to spend the money to replace it for 25 years. So you're not only going to see the future replacement of those common elements, you're also going to see any required industry recommended maintenance that goes along with maintaining the optimal useful life with that. And those recommendations are going to come from the reserve provider and be included in your report. So you've got your budget, you've got your reserves, and then you have sort of the transactional portion of the financials. How does the work of collecting the money and paying the bills and complying with the regulations, how does that get carried out? So you're going to hear our managers use GAAP, generally accepted accounting principles. We are not CPAs. We are certainly, carrying out the transactional work for you from an accounting perspective. We do work with CPAs to do financial reviews and audits and all of, those statutory required components. But the generally accepted accounting principles that we're following have really been laid out in conjunction with working with our CPAs to make sure that our internal protocols as a company align with those accounting principles, to make sure that what we're carrying out from a transactional basis aligns with the requirements at a federal level. And the accounting, sort of how the financials are produced is important to understand from the perspective that what is it that you're looking at? So how are we going about carrying out the transactional piece of this so you know what you're looking at? There's three sort of fundamental ways that the financials can be produced. Cash basis means that you are booking your accounts receivable when it comes in, and you're booking your expense when they are received. And this gets kind of challenging for community associations, primarily from the perspective of you're then keeping sort of separate ledgers for the accounts receivable. So I don't know many associations that are operating on a full cash basis. A modified cash basis is really 95% of the community associations operate on a modified cash basis. And what that means is that we are accruing your financials. So if you're on a monthly cycle for your assessments, that means that we are booking those assessments to your owner's accounts, and we are paying your expenses on a cash basis. So when your expenses come in, we are processing those accounts payable. And a full accrual means you are accruing the AR, you're booking it in whatever, sort of cycle the board has approved, quarterly, monthly, semi-annually, but you're also accruing the accounts payable. And the accrual basis on accounts payable for associations can be a little bit time consuming and does not provide a substantially different end product. So where this would come into play is that if there was any expense that was sort of known, you'd accrue it into that period before you closed the month. So, we hired the landscaper to do some irrigation repairs. The bill hasn't come in yet, so we'd accrue that. The work that takes to accrue it, and then when it's received, go back and process that, creates a lot of extra time behind the scenes that doesn't necessarily change the financial picture for the association. So that is why we operate the accounts payable on a cash basis. We will always try to make sure that we get expenses into the right period. We want your 12 months of landscaping bills to be within those 12 months. Occasionally that doesn't happen, but the overall picture for you kind of winds up in the same place. And so it's helpful to understand sort of what those rules and types of accounting are, because then when we talk about the reports and what you're going to be receiving, it's helpful to understand what you're looking at. So your balance sheet is going to be that first report that comes to you monthly. And that balance sheet is going to provide you with a summary of the community's financial, sort of where are we as a community? What do we have in way of assets? What are our current liabilities? And then where are we sitting from an overall accumulated position? So what's our equity, or are we operating at a loss? And so that balance sheet provides you with that perspective. And I apologize, my presentation got a little bit out of order, so I apologize. But the balance sheet that you receive on a monthly basis is going to look really similar to the one that's on the screen. You're going to have your assets at the top, and your assets are going to be your bank accounts. And your others may be prepaid assessments. It might be outstanding accounts receivable, other bank accounts. You might have some credits. In this example, there's a water credit that's there. So at the top of that report, you're going to see all of your assets. What do we have as far as cash on hand? What are we anticipating to have from our accounts receivable? And the asset for the accounts receivable is important to understand, because when you look at the income statement, your income statement, because it is accrued, isn't going to give you the information on who may be delinquent for that community. So because we're working on an accrual basis for accounts receivable, what that's going to reflect is that all owners have been charged per the budget. So if your budget is $1,000, you're going to see $1,000 charged or accrued into the income portion of your income statement. You then have to look at other reports, the accounts receivable. So you're also going to receive an AR report in your overall monthly package, which is going to give you the details of that outstanding AR. So your AR is going to reflect on your balance sheet, and then you're going to have a supporting report that gives you the details of that. So this balance sheet is going to show that there is, outstanding AR to the tune of $85,000. You're going to have a corresponding accounts receivable report that's going to give you a detail as to who owes what that makes up that accounts receivable portion. And those reports are important to understand because they kind of tie together, and then it gives you that detail that you may want when you're looking, to sort of make decisions. The other report that you're going to receive is going to be your income statement, and your income statement is going to show you, what income has been booked, but then what are your total expenses and what's that sort of net impact for that transaction period. So some board members prefer and like the income statement, and some prefer and like the budget comparison report. Both are going to be included in your monthly packet. The budget comparison report is going to give you the same format, and that you're going to have a current period and you're going to have a year to date. And that comparison is going to be back against what your operating and reserve budgets are. So how are you tracking in line with the budget? What our managers are going to make sure is pointed out to you is sort of what are the significant variances that you need to be aware of within that income statement. So I would say the budget, if you don't look at anything else in that monthly financial package, look at your balance sheet and look at your income statement at a minimum. That's going to tell you how are we doing for, from an overall financial position for the association, and how are we tracking from sort of a net perspective. Are we bringing in enough money to meet our obligations, or do we have some areas that the board needs to be aware and concerned about? Your overall monthly package is going to include, as I said, the statement, income and expense. It's also going to include that AR report, that aged owner report. It's also going to include an aged accounts payable report. So also on the balance sheet, occasionally you're going to see something that is going to reflect a liability of accounts payable. So, later we're going to talk about some key indicators that financially, may raise some red flags. If you have a huge amount of outstanding accounts payable in here, it may indicate that you don't have enough cash to pay those bills. So if you have, $12,000 sitting in accounts payable and you have $1,000 in your bank account, you may have a cash problem. And so understanding why we include those reports is helpful. That aged accounts payable report is also going to function like the aged owner assessment report, and that it's going to give you a detail of what contractors are still owed, when did that invoice come in, how old is it? So, is it 30, 60, 90 days old? and what the overall totals are. So that aged accounts payable report is going to tie back to the balance sheet and give you the details of that line item. In the same way, the aged accounts receivable ties back to that balance sheet. And I would say that those two reports are probably reports that the treasurer is generally going to spend a bit more time sort of diving into and understanding. Normally, all of the board members aren't going into that granular of detail, but it's helpful for you as a board member to understand how those should tie and what those reports are and why we include them in those reports. The trial balance and the general ledger detail, that's going to be included every month in the overall report sent to the board. This isn't going to be included, understand, in the details that are provided to the owners. So the report that goes out to the owners is going to be your balance sheet and your income statement. It's not going to have the level of detail for the accounts receivable and accounts payable and trial balance. That level of detail only goes to the board of directors. And your trial balance is going to be set on a monthly basis for everything that occurred during that period. So it's going to show the detail for everything to every general ledger account that posted and impacted those financials during that period. And then the last portion of the overall report that you're going to be receiving is going to be the bank reconciliation. And, you know, this is really important, I think, just from an industry standard to understand that financials should always include a bank reconciliation. Can I prove, or sort of, do I have a bank statement that ties back to the balance sheet? This is areas that we see most frequently when fraud happens. It's generally because this report was being omitted from overall outside review, and it's sort of a smoke and mirrors that is able to be perpetuated. So it's really important that you always get a bank reconciliation, and you always will from us. So things to kind of, you know, if there were just a quick little checklist that you went through on a monthly basis and just double checked, you know, where the association is from your role as a board. These are sort of the three important things to keep on your radar. What is our cash position? How are our long-term investments from a reserve perspective, you know, shaping up? And where are we from a delinquency perspective? The industry norm is that you want to stay under 7% from a delinquency perspective. We haven't really seen a large increase in delinquencies over the last 2 years. It's something that we've been monitoring very closely since the start of the pandemic to see if the impacts of that situation were going to translate to an increase in delinquencies. We saw it increase pretty sharply in 2000 and between 2008 and 2011. And so we definitely understand the warning signs of those. And we haven't, fortunately, seen, you know, any increase in those aging summaries really over the last 2 years, but it's something we continue to monitor. And really looking at, you know, then does that aging delinquency then result in potential for foreclosure? We haven't really seen the level of foreclosures since 2011 and 12 kind of wrapped up those remaining challenges. The important thing to understand why we monitor this is that if you see that delinquency go up and you have the potential for foreclosure, there is the potential for some loss of revenue there. So the way that the law works is that the debt for that owner can become a personal liability, but it doesn't transfer necessarily to the bank. So there are some strategies where we can get that collected, but the reason we pay attention to that aging summary so closely and kind of monitor that if it started to go up, if you were concerned about foreclosures, what we then have to institute is sort of planning for what we call bad debt. And we haven't seen this become a problem. It's something we continue to monitor as you see, you know, inflation increase and labor crunches, you know, continue. It's possible that we start to see that folks you know, either have hours reduced or laid off and start to have some financial challenges. But so far, we really haven't seen that translate here in the last 2 years. Some important banking standards to understand. Now, these are statutory requirements and also sort of in line are in alliance with generally accepted practices. So at a state level, your operating funds have to be separate from your reserves. So you're going to find that there's 2 bank accounts. Generally, there may be more than that, but at a minimum, you're going to see 2 bank accounts. Your operating accounts are going to be checking accounts because those have a higher transaction capacity. You're able to cut checks without restriction. Your reserves are generally, and I say generally, going to be a money market account because that allows for a higher interest rate to be gained on those dollars. There is a cap of 5 checks per month that you can cut out of that account. And so if you don't have a lot of reserve projects going on, it's not going to be a problem. You're going to see you have your operating and you have your reserve accounts. If you're a community that has a high volume of things that you're paying out of that reserve account, you may see that there is a reserve operating account that has a small portion of money that is a checking account. And generally we do that when the association, the bank will usually give us sort of 2 warnings that we're exceeding the amount of transactions in that money market account. And if we get 2 warnings, then we have to kind of open up that operating account. So there's a little bit of flexibility around, if it happens once, it's generally not a problem. But if it's an ongoing thing, then we have to have a second operating checking account for the reserves. Investments, from a statute perspective, if you're putting, sort of investing retained earnings or reserve dollars, they have to be in principally secured accounts. You cannot play the stock market with the association's dollars. We can't put it in Bitcoin. It's really critical that we make sure that the dollars collected, if they are in an investment vehicle, that it's in principally secured. It does restrict what the association can do with those funds. And it becomes a little bit frustrating for communities that have larger balances, $1 million, $2 million sitting there to be earning, such low interest rates on that money. But the important thing to make sure that you understand is you're a fiduciary for the association, and you have an obligation to make sure that you're not risking the association's financial position. So there's kind of definitely 2 sides to that coin, but it is required from a statute perspective to be in principally secured accounts. We utilize a lockbox service for separation of duties. Really, that comes into play in making sure that, we aren't handling checks here in our office. We aren't storing your banking or financial information, especially with the increase in sort of internet crimes and data crimes. The less data that we're storing for individuals that, are at any level of potential risk, the better. So we utilize the lockbox service. That's why you'll hear sometimes owners say, why am I mailing my payment to San Francisco? That's because our lockbox is in San Francisco, and they utilize, sort of digital processing for that. It not only is it much more efficient, but it does provide those separation of duties to make sure we're complying with generally accepted practices. And, when cash flow is low, it's helpful to understand that associations, they can get lending. It can bridge the gap of funds if you happen to be a community that, maybe 30 years ago, you didn't plan quite enough for your reserves and you have projects now that need to get done. The banking process for getting lending for community associations, it's pretty painless, and it can be quite helpful to help bridge those gaps. So some warning signs to look for when you're reviewing financials. We share this really from the perspective that I believe information is power. And I think every board member should understand this. This is something that as a company, we take very, very, very seriously and take a lot of care in making sure that we're being transparent with the financial process to our associations. These are things that our staff is trained in and, is going to be bringing forward to you. But if you're ever not managed by a Perian and you are involved in other boards, these are really important things to understand. These are things too that, from a buying perspective, if you're buying in a condominium community or you're buying a home and they're in an association, pay attention to these things. It's always helpful for people to ask questions and understand what they're getting into. So, some warning signs to look at is there a steady decline in the amount of cash on hand. So have we gone from having $20,000 in our accounts, to having 5? Why? Are we seeing an increase in accounts receivable? Are we seeing an increase in expenses that we didn't anticipate for? There should be an explanation for that. Significant or unexplained differences between, actual and budget figures. This is something that you may see in newer communities, but generally is uncommon in more established communities, unless there's some reasonings behind it. There certainly has been some things that were outside of communities' controls over the last couple of years. We've seen huge increases in fire protection insurance due to the wildfires here in Oregon. There should be a reason for it, but if it's unexplained or you're seeing this sort of steady increase, that is, definitely something that you should be asking questions about. Sudden increase in owner assessments owed against the community. Is this an indication of something that's happening economically, or is there a challenge there? Unusually high legal expenses. If you're buying a piece of property or you're looking at an investment, I would ask questions. If you see a lot of legal expenses, it could mean that there's something else going on. There may be a very, very reasonable expense. Maybe they're redoing their CC&Rs or they're rewriting policies where you'd want that legal advice there, but ask the question. Absence of a reserve study, that's always, I think, really challenging, because that means that the community is missing that financial planning tool. And it is a really important piece of the puzzle. Failure to resolve differences between bank statements and financial statements. This is, I think, when we have heard about instances of fraud in our industry, it is most generally perpetuated through some type of modification or lack of providing of the bank statement. The board's looking at the balance sheet. It looks like the assets are there. They didn't ask for the bank statements, or they weren't being provided to them. So it's really important from an industry perspective that any board, any volunteer board that you sit on, that you're getting a financial package that includes the bank statement. And sort of, missing financial statements or not receiving them, that is always a warning sign that, there's an issue. Is the work getting done? Is deposits being processed timely? Are people being paid? There could be, other unintended consequences from that situation, but the financials should be reconciled monthly and be provided in a timely manner. So what are some of the roles for the team when it comes to execution of the financial process? The role of the association management company is that we're going to be helping to, provide that financial oversight. And what does that look like? From the management process, we're really implementing the board's policies, and that's happening by the board approving a budget, adopting a reserve study, laying out those planning tools that we talked about earlier in the presentation to really provide that groundwork for the manager to then take and implement those policies and sort of carry out the daily operations of the association. And the manager is going to serve sort of as that buffer between the board on those, or the owners on those day-to-day concerns. They're going to be taking calls about the owner's assessments or answering questions about the budget and interfacing with contractors, all of those types of things. But we can't do our jobs if the board doesn't lay out those processes. And so that's why it's so critical to understand the budgeting process and the reserve study process, because those then become the planning tool that our managers utilize to help you guys execute this work. And, kind of understanding that our managers are generalists, they're not specialists. So there's going to be things that they're going to be able to maybe answer some preliminary questions. But if you have really specific questions about, certain CPA protocols or, auditing, that type of thing, we might bring in a CPA, we might bring in an attorney to answer some of those questions and kind of assist in that. And our accounting team, they're sort of the ones carrying out the day-to-day of the transactional side of this work. They're processing the accounts receivable. We are processing payable. We process payables continually throughout the week. We utilize a really efficient online system to make sure. And part of that is we want to take care of our business partners. We want to make sure that your contractors are paid in a timely manner. So they want to continue working with you, especially right now. We're maintaining the tax records, including W-9s and insurance. This is a really critical thing. When the board approves a new contractor, we're not going to pay that contractor until we get a W-9 and insurance from them. That's our leverage, and making sure that that is staying current. So when that insurance expires, we're asking them for updated copies of those certificates and keeping that in good working order for the community. Oversight of the collections process, we're processing late notices and sending communication to the attorney when necessary when you have collections files. We assist hand in hand with your auditors and your financial reviews. We're not performing those reports, we're working with your CPAs, but we're providing them with reports and backup information to those transactions and copies of invoices and deposits and all of those types of things. And making sure that, owner chargebacks happen if we're billing somebody for water, or, somebody damaged the common area. We're sort of tracking those things and making sure from an accounting perspective that that's getting taken care of. And it's really important to understand that though that accounting team, as I mentioned earlier, they're really more bookkeepers. They are processing the day-to-day of that account. So when it rises to that level of processing your taxes or preparing your audits or doing your compiled financial reviews, that is done by an outside CPA. And that is, also creates that additional separation of duties so that you don't have all one person doing all of those things. And you have those sort of checks and balances to make sure that there's integrity around the financial process. And that's really, really important. So a couple of policies and sort of procedures to be aware of. As a board, it's important to understand your accounts payable process. Who's looking at the invoices on a regular basis? Do you have your treasurer looking at everything? Is there certain dollar thresholds that they're looking at those? We have the capability within our software to make that unique to any specific to your community. So we can make sure that that is set up per your sort of requests and requirements. And so talk about that as a board. If you're the treasurer on your community, you may want to have a chat with the board and see what their preference is. We can give read-only access to the accounts payable process, so it doesn't necessarily have to be that the treasurer has to approve everything, but we have a lot of flexibility around that process. We want the board to have as much access to that as they would like, and so it's helpful to at least have a chat about it as a board and make sure you're on the same page, especially if you're new to the board or you have new board members on. You may just want to add it to your next agenda and have a conversation about it. And then accounts receivable, refreshing sort of what is your collections process? When are we sending things over to the attorney? How does that process work? Having some understanding of, are you going to delegate to the treasurer that they have the ability to write off late fees or interest or make payment plans, but understanding what the desires of the board are and what the authority of the treasurer is an important conversation to have as a board. Investment policy. So as I mentioned earlier, at a state requirement, you have to keep things in principally secured accounts, and you need to have an investment policy in place. So if you have a large amount of cash on hand for your reserves, really would recommend that you adopt an investment policy as to what are the objectives of that. Who has the role of guiding those investments? Most of the time you're going to see those in CDs or, laddered investments based off of when you need the money. And, what is the monitoring and communication that happens? How are those decisions getting made? But those investment policies can lay all that out. We have examples of them and can help the board draft them. But if you are an association that has a pool of funds that is currently sitting in a money market account and you may not need it for a while, there is some ways to invest that and gain some, it's not huge right now, but gain a 0.5 point or a point more on interest. So hopefully, you kind of have a better understanding of what do those different financial areas look like? What are the reports associated with those financial areas? Some understanding of the accounting process for your community and sort of, what do you need to understand or sort of look at from a financial perspective? I will also say that, it's our role to be keeping, records and ensuring that your role and responsibility from the board is taken care of and keeping the history of all of this. So we keep pretty organized files from a record keeping perspective and make sure that, if you ever needed to, we could produce, years and years and years of that history. So hopefully you have a better understanding of your association financials. I would happy to take questions if you'd like to unmute and ask me any specifics. You can type it into the chat as well. Okay, you guys are quite a bunch today. Well, thank you again so much for joining us. We do hold these trainings monthly. We do kind of a different topic each month, and we appreciate you giving us a little bit of your time and learning a little bit more about your role as a board member. So thank you so much. Have a great afternoon.
Thanks, Katie.
Thank you.